Every commodity market has its own set of leveraged financial bets. Wildcat exploration and production businesses exist in the crude oil industry, whereas mining operations exist in the gold and precious metals industries. Bitcoin, a future commodity, is no exception to the rule that miners will rush in to stake their claim to the wealth when there is a rare resource to exploit in the world and investors are placing rising value on it. Recent increases in what may be the riskiest Bitcoin wager of all prompted Leeor Shimron, Vice President of Digital Asset Strategy at Fundstrat Global Advisors, to investigate the digital gold rush in Bitcoin miner trading. Hey everyone, welcome back to our channel. In this video, we will be talking about Bitcoin and when to buy in. And before we start, make sure to hit the subscribe button and turn on the notification bell. Done? Let's get started. These mining businesses are relatively new and immature. They lack track histories, and some of them came to market in roundabout ways. And some of the largest, such as Riot blockchain, were subjected to regulatory scrutiny in their early days. They have also been losing money, but Shimron pointed out that they have a market valuation of over $1 billion after spending extensively during the Bitcoin downturn in the technology and facilities that have enabled them hit it big in the current Bitcoin bull market cycle. In a message to investors who expressed interest in the soaring equities last week, Shimron described the miners as a high beta play on Bitcoin. According to his data, the average return among the largest publicly traded miners was 5,000% over the latest bull run for the cryptocurrency, during which Bitcoin has increased by 900%. Bitcoin miners, according to Shimron, burn electricity to computer-create guesses aimed at solving cryptographic riddles and generate revenue in the form of mined Bitcoin. Miners sell their assets to offset their costs as Bitcoin is mined. Many choose to keep a percentage of their mined Bitcoin on their balance sheet, a move that is gaining support among the more digitally oriented, disruptive CEOs class in the larger market, such as Square's Jack Dorsey and Tesla's Elon Musk. Musk just added Techno King to his executive title, and Tesla's CFO recently received the title Master of Coin. Marathon Digital Holdings, a North American mining business, recently revealed that it had purchased an extra $150 million worth of Bitcoin to keep on its balance sheet. Riot Blockchain and Marathon Digital Holdings, both NASDAQ-listed businesses, as well as Hive Blockchain and Hut8, both over-the-counter market stocks, were among the largest publicly traded mining companies analyzed by the Fundstrat analyst. According to Shimron's research, the beta of these Bitcoin mining businesses delivers a 2.5% return for every 1% shift in the cryptocurrency. While there isn't enough evidence to draw definitive conclusions, the miners' performance is definitely linked to Bitcoin's price, and the trading style accentuates the upside and downside, he said. In Shimron's words, it's a notoriously competitive industry where the capacity to be lucrative can come down to access to inexpensive electricity and specialized mining technology. Miners spin up new rigs or upgrade their hardware with more powerful and efficient computers as Bitcoin's price rises. Marathon just paid $170 million for 70,000 Bitmain S19 ASIC miners, bringing its total mining power to 103,000 computers when completely installed later this year. According to Shimron, Bitcoin mining's high cost of doing business results in low or negative free cash flow and muted earnings. However, as a result of their spending, mining businesses have currently seized the increase of the current Bitcoin bull cycle. They have also grabbed the attention of some of the market's newest forces, as a recent Bloomberg article reported, with Bitcoin miners being discussed on the Wall Street Bets message board on Reddit, fueling the hysteria in GameStop stock. That beta makes it a wonderful chance for investors wishing to obtain exposure to miners during the middle of a raging bull market. In an interview with CNBC, Shimron remarked There are fits and starts and pullbacks, but we still have a lot of room to develop here. The miners have been pushed by the overall bull market in cryptocurrencies, which Shimron believes will continue in 2021 owing to macroeconomic and demographic factors. Fears of inflation will support Bitcoin prices, and despite recent yield pressure from the 10-year Treasury, which can affect cryptocurrency the same way it affects technology stocks, he believes it is clear from Fed signaling that the central bank wants to keep its dovish policies in place until 2023. Younger investors' continuing acceptance of new digital technology and digital assets is another driving reason. Younger individuals are gravitating toward Bitcoin and other digital currencies rather than gold and commodities, which indicates a demographic shift. To them, interacting with money in a fully digital manner is not insane, he told CNBC. Morgan Stanley became the first major Wall Street bank to offer Bitcoin to its high net worth clients last week. Given the dangers, it only allowed clients with a net worth of at least $2 million to participate. Other than the core currencies, there are existing avenues into the crypto market, such as exchanges that trade coins, which will soon be available to more investors. Coinbase reportedly had a private market valuation of $68 billion and is considering a direct listing on the Nasdaq. In Canada, there are 3 Bitcoin ETFs, and a Bitcoin ETF may be accessible in the United States at some point. Van Eck ETFs filed the most recent application with the Securities and Exchange Commission in mid-March, but with investors losing optimism that the SEC would approve a Bitcoin fund anytime soon, they're exploring for other cryptocurrency investing options. Before joining Fundstrat, Shimron headed an early-stage cryptocurrency and blockchain investment fund, and he sees miners as a basis for the crypto space. The top corporations will be here to stay, he said, citing economies of scale in equipment investments that future entrants will find difficult to compete with. Following their wise move to build out operations during the Bitcoin bear market, current tech sector supply chain limitations created by COVID may assist these miners further position themselves after the funds they have already invested in specialized machines for the space. Nonetheless, he is more likely to trade Bitcoin miners in a bull market run than to maintain them as long-term assets, as many traders and hedge funds do with gold miners and small-cap oil explorers. Shimron continues to favor Bitcoin as a long-term investment, as well as any ETF certified by the Securities and Exchange Commission for U.S. investors. He stated it's only a matter of time before the SEC authorizes a Bitcoin ETF. When a BTC ETF comes out, the costs will be cheap and it will be the safest and easiest method to obtain exposure to Bitcoin using standard rails, he said. The miners have been chastised for the massive quantities of electricity required in Bitcoin operations, but Shimron's perspective is based on the numbers and market performance. It's evident that the US dollar as a global reserve currency is on its last legs. It's not going away anytime soon, but we are in the final phases of the dollar as a reserve currency and decentralization in the next stage. He is confident in claiming that the world of cryptocurrencies should be on everyone's radar, even though Bitcoin mining stocks are too high risk for most investors. This is where it's all going. Finance has been the only holdout unaffected by the internet, Shimron explained. Over the last 4 months, Bitcoin has only been above $45,000 for a few brief periods, and it hasn't been above $50,000 since December 25, 2021. Despite this, Bitcoin has remained above its 6-month low of $34,000, which it hit in late January. Despite the ups and downs, Bitcoin's current price is still a long way from its all-time high of $68,000, which it reached in November. Despite the current price drop, Bitcoin is still worth more than twice as much as it was just a few years ago. These types of ups and downs are nothing new for Bitcoin. Despite the volatility and recent price drop, many analysts believe Bitcoin will eventually cross the $100,000 milestone However, there are differing viewpoints on when that will happen. According to a recent poll by Deutsche Bank, approximately a quarter of Bitcoin investors anticipate the price of the cryptocurrency would exceed $110,000 in 5 years. The volatility is nothing new, and it's one of the reasons why experts advise new crypto investors to be cautious when committing a portion of their portfolio to cryptocurrency. Bitcoin is more of an inflation hedge than a risk asset. According to Russell Starr, CEO and Executive Chairman of DeFi Technologies, according to him, inflation is likely worse than current data indicate, citing a popular theme in the crypto community. He believes the United States could enter a recession, prompting the Federal Reserve to ease monetary policy once more. He stated over the phone, "Yes, you may see some near-term weakening, but in this scenario, Bitcoin will eventually test $60,000, $70,000, $80,000, $100,000. Did you find this video informative or helpful? Let us know in the comment section below. Make sure to subscribe so you don't miss out on my future videos. Don't forget to like and share.